what are you watching for most closely with Chevron?
I think overall you get a solid set of numbers. Obviously, we're coming off a very, very strong third quarter, so we get a bit of moderation in the macro there. But overall, I think in the context of Chevron's history, extremely strong results. I think the announcement yesterday on the dividend was largely expected. The surprise factor was the big buyback program. And the key question for us is, what's the cadence of this $75 billion? Because if we're assuming this is done over 5 years, as an example, that's $15 billion a year. That's the top end of Chevron's prior plans. And ultimately, that means that their upside case is becoming the base case from a macro standpoint.
Yeah, you know, look, I'm not going to ask you to dive into the nasty world of American politics, Biraj, but Chevron taking some heat about the buyback. Why aren't these companies investing more in capex? Yeah, it's up $2 billion over last year, but still down from $40 billion in 2013 to, I think, 17 or 17 and a half, correct me if I'm wrong, billion for this year. Is there just a dearth of opportunities to grow profitable production, or if not, what is it?
Yeah, I guess sitting in London, I can make a few comments with a bit margin of safety from American politics. But I think there's 2 points I'd like to make. The first one is both Exxon and Chevron are growing in U.S. oil production, both spending growth capex and growing in the Permian 10 to 15% per annum, and that will continue into 2023. And that is ultimately a growth rate that's faster than oil demand is growing globally. So that should be a positive sign. The second thing is, you know, if you lined up Chevron or Exxon's top 20 shareholders, I would imagine 15 of them would say, actually, we don't want you to spend more in growth capex, because we've seen how that story ends in pretty much every oil and gas cycle through history. And so we want you to be disciplined. And ultimately, that is being rewarded by the market. So a little bit of growth is okay, and that's what they're doing. But I think they're doing what the shareholders want them to do, which is be disciplined, don't chase high oil prices, and stick to the plan.
You know, here's, and let's just, you and I, don't tell anybody, Biraj, but here's kind of the little secret about Chevron. We always talk about oil and gasoline, but Chevron has kind of quietly become this liquefied natural gas big player, right? With their Gorgon project. How big is LNG been, and how big do you think it can be for Chevron? It's
so actually relative to some of the European integrated companies, it's smaller, but it's still a meaningful cash generator for Chevron. And the assets that they have are performing extremely well in Australia, and that's been a very significant source of profits this year. As you're looking forward, I guess the hesitation from Chevron's standpoint is if you think about the projects they've executed, Angola LNG, then Gorgon and Wheatstone, they've all had issues in terms of execution. So I think they've been a bit more cautious the last 5 years. You've seen them do, so I would argue, with lower risk growth strategy in terms of being an off-taker out of the US. If you look at their portfolio, they're growing Permian oil production, which means there'll be more gas production that we'll have, and they need to find an outlet for that. And so growing as an off-taker of LNG out of the Gulf Coast is a very sensible way of increasing the LNG exposure. And I think when you listen to management, seems like an area that they want to increase exposure to over the medium term, given the strong demand dynamics for LNG.
A lot of positives coming around Chevron. You've got a 170 target. Stock's above that, Biraj. So why aren't you more bullish on Chevron stock right here?
So I guess I'm looking at it in a global context, and it does screen expensive relative to some of its peers. And so our fundamental preference over the long term has been Exxon. The 2 kind of differentiators here. The first one is we think Exxon has a stronger hopper in the oil and gas business, with Guyana, with Golden Pass, and some exposure to Qatari LNG. And the second thing is Exxon has exposure to refining, and that's an area we've been particularly positive on in 2022. And we think that continues through 2023. The distillate market is extremely tight. You obviously are seeing some impacts from recessionary forces. We expect that market to remain tight for some time.